Hello traders, welcome back to a brand new video. In this video I want to show you how you can use your candlestick to better your trading skill. So in this video I want to show you some of the tricks that you can use to understand how the market moves, and you will also improve into your trading. I hope this video will help you a lot because I have some tricks that I'm going to show you. If you stick around, you will understand them, how I use them on a daily basis. So from here we can see that we have a bearish candlestick. Let's firstly understand how a bullish and a bearish candlestick are formed. We have basically the only difference between a bullish and a bearish candlesticks is the open and the close. As you can see, the bearish candlesticks open at the top and the bullish candlesticks open at the bottom, and the bearish candlestick close at the bottom and then the bullish candlestick close at the top. So you can clearly see the differences like this. You can see that's the only differences that you can identify when you want to know what is this candlestick. Okay, so from here guys, let's firstly explain how a bearish candlestick will form during a trending market. A bearish candlestick will open like this. It will firstly consolidate and then shoot higher, and then this high here is this one here. This is the high, and then the market will move lower like this. It will move lower, okay, like this. It will shoot lower and then create a low and then close around here. This one will be a close where the market will close, okay. And then on the bullish candlestick, because we start from the open, we open here, and then the market will move and then shoot lower to make a low, which is this wick here. And then once the market shoot higher, to make a high, it will come down to close. This will be in between. It will be during the day because this is the opening time, and then this low will be created during the day. Even this high will be created during the day. And once the market closes, in between the open and the close, in between the close and the open is where the market will create a body. Like, for example, let me do something like this for you to understand. You can see that we have an open here. We have an open around here. Let me do something like this. A zone. We have the market that is opening here. And then the market creates a high. You see, I'm still holding this thing here. Then the market creates a low and then it closes around here. This one will be a bearish candlestick. It will be something like this one here. So even on this side, you can see that we open here. I will start around here. We open, we create a low. The market will be moving like this, going up and down, and it will do something like this, like this. It will create a high, then even moving forward and then close around here. Then this one will be called a bullish candlestick. So how can we use this into our trading style to better understand how the market moves? So let me erase this area here so that we can understand each other. Let's say maybe we have something like this on a chart. The market shoot higher, dropped lower, and then right now is consolidating like this. And then the market starts to open here, it opens here, and then start to shoot lower like this. So once you see something like this, because right now on the side, let me divide this, because on the side we have a bearish candlestick. This is the beginning of the day. The market started to open here. Let me copy this. Let me change this color to green maybe. We can see that the market opened here, okay, and then it started to shoot lower. Once it shoot lower guys, that means right now we have a low here. And remember, this is during the day. The market opened and then shoot lower. But if we remember, if the market open and shoot higher, we might potentially see a bearish candlestick. But in this case, we can see that the market opened and then started to shoot lower. So we still don't have a high and a close, because right now we have a open but a low. If the market was opening like this, it opens and then it started to shoot up like this. Okay, that means right now we have a high here. We have a high like this. So in this case, we have to predict which candlestick will be formed to better understand how the market might potentially make another candle which can be in the direction that we want to anticipate. So in this kind of situation guys, if we have something like this, we have an open right now, we have to wait if the market is going to go up or down. You can see here the market shoot higher. In this area the market was moving lower. Okay, so from here guys, what you need to understand is that you need to create a candlestick inside your brain to better understand what the next candlestick will be formed. Because we have an open and a high, that means right now we are left with the low and the close. So in this area, so from here we are left with a close from this side. Even in here we are left with a close. And then another thing, on this one we have to find a low, and then on this side we still have to find a high. So in this kind of situation, if the market started to shoot higher, that means right now we have to try to catch the trade to find the low before the market can close. Okay, I hope we understand each other here, but I'll also demonstrate this to you guys. So if the market market is opening here, let's say maybe we are on the daily time frame, the market is opening here, it should lower. That means right now we are left with this. So that means we can still try to catch this low to target the high of the day before the market can close. Okay, so from here guys, this is pretty much simple to understand, but let me show you again. I'll do something like this. So guys, this is the example. From here we have this bearish candlestick here. The market is opening like this. Okay, it's opening, the market started to shoot lower during the day. Maybe it can still shoot lower below this previous low here, but as you can see, we don't have a high and then a close of the day. In this kind of situation guys, what you can do is that you can still try to find an entry around here, maybe something like this. You can draw your zones in between like this. This is your demand zone from here. So from here guys, you can still try to do something like this. Enter the market from here to target the high, the previous high, which will be this candlestick's wick from the previous day, and then the market might potentially move in something like this because the market is trying to create the body. Right now the market will be very aggressive, then the market will hit this high or maybe shoot higher and then start to be slow when the market closes. So right now you have used the candlestick's advantage to enter the market properly. So in this kind of situation, the market will build a bullish candlestick. We have opened here, the market created a low. As you can see, I'm still drawing, then the market was moving, we have a low around here, and then the market is shooting high. In this area the market will still be bearish like this, it will still be bearish like this, and then it moves higher. Once it crosses the open, this will change to bullish, and then we will have a wick below here. We will have this wick, and then the market will shoot higher like this. Once it makes this high, the market will still be moving, and then it closes the day. So that means right now we will have this wick above the candlestick's body. Okay, so this is how a candlestick will be formed, but you have to trade inside this forming candlestick. So let me show you an example on a real chart. Maybe you will understand this properly. From this example over here, we can see that the market is bearish. We have a lot of bearish candlesticks in the daily time frame, but we want to trade the next candlestick, which we don't know yet. So from here, what you can do is wait. You can put your close around here because the market closed at this area, and then you can move on to the lower time frame because you want to understand where the market might potentially go. Because once you understand the higher time frame from here, you will know very well when you move on to the lower time frame if the market is going to go up or down. But remember, during the beginning hours of the opening market, the market might potentially start to slow down, be very slow. Maybe because we are on the 1 hour, you might probably wait for at least 3 hours or so if you are in the lower time frame to find the low of the day. So let's move on to maybe I'll use the 30 minutes. We have this thing here. We don't know where the market is going. Someone could say the market is still going to the downside with this zone here, which is not wrong at all. And then someone could say the market can still push higher from here. Because we are on the lower time frame, we have to decide if the market will open and then shoot lower, because this is the close here. The next candle must open right now. If the market starts to move lower first, I'll consider this a buy setup. If the market should higher first, I'll consider this as a sell setup. Okay, but also you have to understand that the market can still play around in this area before it can shoot lower. But from here, you have to find the low or the high first. So let's wait and see how the market will play out from here. The market is shooting lower. You can see the market started by going lower first. So from here, I'll consider this. The market is trying to make a new low. That means the next candlestick can be a bullish candlestick. So in this kind of situation, I'll be looking for the market to stall down because it started by shooting lower first. So I'll probably draw my zone around here because this will be a great trade setup for me because we have a previous low that has been manipulated, and then we have a high, and then we have a low that I want price to take out before it can shoot higher like this. If you understand what I mean here, then you are good to go. So from here, I'll just put my buy limit order around here, long position from this demand zone here, put my stop loss around here, and then wait for the market to play around here and then touch this and then shoot higher, because I still want this flow to be manipulated. So let's wait and see. The market is trying so hard to push higher. Boom. And then you are inside the trade right now, because right now you have the low. Like as I said before, let's see how the market was playing around for how long, because the market opened here playing around for a few hours or so. Let me check the time from here, from around 12 and then until during the day. So from here you are in the trade, so that means you can just wait for the market to play out as expected. So even if you miss this one, you can still try to enter the market on this candlestick here. But even though the market didn't touch it, this was a good trade setup in my opinion. So from here you just wait throughout the day and see if the market will just play into your anticipated direction of the market. Okay, as you can see, your take profit was hit, but on the next day, because we are still bullish. So even on the next day, guys, if the market was making some bearish candlesticks on the side and started to make some bullish candlesticks, that means you just have to wait for the market to open, shoot lower first. If it opens around here, let's say the market closed around here, the market opened around here, as you can see, it should lower first. Let me just remove everything here so that everybody can understand. The market closed around here, it was playing around and then it should lower. Once it should lower like this, it's still 9 in the morning, so that means you have to look for an entry around this area and then shoot higher and then wait for the market to close. That's all you have to do, because you are predicting the next candlestick formation in this kind of situation. This will also help you guys a lot. I know I've been talking a lot of things here, but if you don't understand anything that I have said throughout this video, please comment below so that I can make a part 2 of this video with more examples. But from here, guys, please make sure that you join our free Telegram group. The link will be in the description below, and also don't forget to subscribe to the channel, because there are more content that I'm going to post in the near future. Please make sure that you have that notification bell icon on. I have some valuable information that I'm going to share in the future. For now, the only thing that I can tell you that you have to do to practice this efficiently is just go and backtest this. And also, if you want to make everything clear, backtest this without making any entries. Just backtest this and see how a candlestick can be formed, because that will always boost your trading skill to the next level. So guys, I guess I'll see you on the next video. Always use a stop loss and proper risk management, or else you will blow your trading account. See you on the next one, guys.